Cool. Yeah.
Cool.
Brilliant. Yeah, and we're over 430 people on Zoom. So brilliant. Great. Well, good morning, everybody, and welcome to all of our brokers and insurance partners in South Africa, and as we've just said, across Africa as well, which is super exciting. So just a quick reminder, I'm Dale Sutton-Price. I look after the iTOO Africa team, and we've got our team on the call and all our insurance partners and brokers from Namibia, Botswana, Lesotho, Mozambique, Zambia, where we have presence as iTOO, mainly in partnership with Hollard. And we've also got Mark Levitt on the call, who moved to Nairobi a week ago, just over a week ago, which is really exciting for us to have our first person on the ground in East Africa, which is a very fast-growing market on the continent. So May is Africa Month, for those of you who don't know. And so we thought renewable energy would be a very important topic to talk about. You know, the abundant sources of renewable energy on the continent and the significant investments into the sector, as well as the obviously serious need to fill the power gap, given growing economy. So just a couple of quick stats before I hand over to the experts. So the Africa Development Bank estimates that funding required for Africa's power needs is about $300 billion until 2025, and an additional $200 billion for the period 2026 to 2030. So that's massive. And within our territories that we focus on, they estimate about $220 billion of investment being required. So that's a significant opportunity for insurers and businesses, and part of what we'll talk about today. In addition, I think the focus on clean renewable energy sources is both an ESG imperative for companies and countries, as well as I say, a core macroeconomic requirement. So I think who better to discuss the sector from a specialist insurance perspective than GCube, who are the global leaders in renewable energy insurance, and iTOO RenewRisk, Africa's first and only niche renewable energy underwriters. So I'm going to introduce the two experts on our panel today, who will take you through a short presentation, and then we'll leave some time for Q&A. So firstly, thank you so much to James Mulligan, joining us from the UK and GCube. James has been specializing in renewable energy insurance for the past 8 years. He joined GCube in 2021, specializing in African renewable projects. And prior to that was working as a renewable energy broker, focusing on both onshore and offshore projects and finding solutions for clients. And then Jared Nivison, who many of you will know. Jared is iTOO's very own renewable energy guru, specializing in specialist underwriter in the space for many years, and a lot of experience in the big projects in South Africa and many of the African countries that I referred to, and they've got some cool examples to share with you today as well on that. So without too much more, over to Jared and James. Thanks, chaps.
Yeah, thanks, Dale. Thanks, James, for joining. Thank you, everyone. Thanks for joining us this morning. James and I will take you through pretty much a high-level overview of renewable energy as we see it in South Africa and Africa. I recently spoke at my mom's memorial, so hopefully today I can speak with as much passion and love as I did that day, but I am still a bit nervous, but I'll give it my best shot. James, you'll see, he gets a different level of energy when he does these things. So James, if you can put the presentation up, that would be amazing.
No problem.
Thanks, man. I control it. Okay, cool. I'll just take you through our slides, and James and I will talk around them. And then at the end, we can field any questions the brokers and everyone else has. So who we are, Renew Risk, formerly RRA or Renew Risk Africa, was founded by my friend and colleague Mike Robson in 2011 to become Africa's first and only niche renewable energy underwriting manager. So Mike saw the writing on the wall that renewables was going to be coming to South Africa and Africa. It was first in country, and there was no insurance product available for what was coming ahead. So he did some research, found a few specialists in London, flew over to London, and met with GCube and a few other players. And after 3 days in London, came away with a gentleman's handshake with GCube, and we've never looked back. We're still writing business with GCube, and they're just like a sister brother company in London. RRA, we've been very successful in the Renewable Energy Independent Power Procurement Program, REAP. Everyone should be quite familiar with the REAP terminology, seeing it in the news. And if you're in the space in South Africa, and the Renewable Energy Feed-in Tariff Refit Program in Namibia. We've done a lot of the renewable energy projects in Namibia and South Africa. RRA, we have an annual gross written premium of in excess of 260 million. It's just Mike and I at Renew Risk Africa, and we've managed with GCube and Access Capital and our reinsurance partners to procure, a $500 million capacity any one project treaty. We have a very close relationship with GCube and Access, obviously with GCube being there from day one and Access a few years later. And as Dale said, GCube are the specialists. They only write renewable energy insurance and have done so since day one, which has been for over 25 years now. Access also have a specialty renewable energy division, and so do our other capital providers. iTOO and Hollard bought a majority stake in Renew Risk in 2020. So we're now just recently rebranded to iTOO Renew Risk. Next slide, thanks, James. Our project profile, we thought it would be apt just to show you the projects we look at, our bread and butter. We look at the utility scale projects, the big solar farms, the big wind farms. We don't do the household rooftop projects. Thanks, James. Next slide, right? Thanks. So who we are, we look at projects owned by the IPPs, the independent power producers, who enter into power purchase agreements, PPAs, with NAM Powers, Eskom, other off-takers, mines, municipalities. We do the large utility scale projects, solar farms in excess of 5 megawatts, and wind farms. These are generally 80 to 140 megawatts currently in South Africa. We used to do the small hydro facilities, but we've moved away from these due to the volatility of these risks. So don't do thermal energy. As alluded to before, we don't do the rooftop. We have done in the past, but we decided to concentrate on the larger projects. The rooftop projects tend to be small premiums with large losses. Renewable energy is just, the losses are just, they're very, very large and scary. Low severity, low frequency, high severity. We're starting to see a lot more inquiries in respect of battery storage energy systems, which is BESS. So hopefully we'll see a lot more of that, especially taking into account the current energy crisis in South Africa, the need for more baseload power. iTOO are also able to offer cyber, DNO, commercial crime, and political violence, PVT. We also offer the PVT project cover. James, thanks. One of our differentiators is our ability to offer everyone the cradle to grave product. Renew Risk offers a bespoke cradle to grave seed package, which meets everyone's needs. The developers, owners, manufacturers, contractors, lenders, one insurer, all encompassing. We provide insurance through all stage construction to the first year of operations, all under one policy seamlessly through for 100% solution for our clients and brokers and lenders, obviously subject to whatever the local reinsurance insurance. But in South Africa, we offer the 100% solution. This is what our product looks like, just visually. So we'll do the marine cargo. So importing the blades and the panels and the transformers from Europe, China, onto the ship. From the ship into port, offloading, unloading onto the back of a truck, and then the transport to site. Also with the marine cargo, if we take a step back, if anything happens, if the containers go overboard or the blades sink or fall off the ships, and this delays the project getting to commercial operations, then there's a potential delay in startup. Claim there, and then we will cover the anticipated revenue losses until the project has recovered. SASRA is obviously for South Africa only. Then once we move from the marine, we go seamlessly into the CAR, the construction all risk phase. Once again, this is when the equipment arrives on site, is unloaded, and then they break ground and it's erected. All risk cover. And once again, if there's a delay there, if something happens during the construction phase which delays the project, then we will cover those loss of revenues. Also, we include third-party liability, and then we move seamlessly into the first year of operations, which is also all risk cover, including business interruption, your revenue covers, and liability. Once this is also including mechanical and electrical breakdown during the CAR and operational phase. Thanks, James. The key role players we see in renewable energy in South Africa and Africa would be the IPPs, the independent power producers, the developers. They will develop and get these projects going. And they'll need an EPC contractor to construct the projects. The EPC is the engineering, procurement, and construction contractors. We also need, there's also the experienced balance of plant, the tier 1 OEMs, and experienced O&M operators. I mean, these we see that the IPPs are the likes of the big international companies, Mainstream, Enel, Energy, EDF, Globelec, Skatec, Red Rockets, and Malulos of the world. The latter being from South Africa. The EPC contractors we see are the Dewey's, Skatex, Nordic, Siemens of the world. Also the same with the OEMs. These would be the Vestas, Siemens, Gamesa, Jinko Solars, and experienced O&M operators. Most of these companies have in-house O&M operators. And the O&M, their job is to basically make sure that they maintain and optimize the performance of these renewable energy projects to maximize energy production to around P50 generation and minimize downtime. Next slide, please, James. Yeah, thanks. If we continue with the key role players, as we see it, the IPPs will need to choose their finance parties, the big banks, the APSs, the net banks, the IDCs of the world, etc. The EPC contractors, the O&Ms, as I previously discussed, their legal advisors, their brokers, and their insurance partners, with the likes of Renewrisk Africa, Renewrisk, and GCube. The lenders will have their LTAs, their lenders technical advisors, and the lenders insurance advisors. And all of these pretty much are a crossover during the getting these projects from start to finish bankable to financial close and erected and evacuating power to the grid eventually. The IPPs will negotiate their PPAs, their power purchase agreements with the likes of Eskom, NAM Powers, and other off-takers of the world. Their ultimate goal is to reach financial close and draw down and then start erecting these projects. The projects start construction, and then once finished construction, they will go into operational phase. Let me see. We don't want to do any EPC contractor policies. We like to do the principally controlled insurance programs in conjunction with the brokers and the clients, and we don't do PI either. Thanks, James. Next slide. REAP, the Renewable Energy Independent Power Producers Program in South Africa. This is worldwide. This has been heralded as a fantastic program, winning numerous awards. It's kind of fallen to the wayside lately, but it all started in 2011 when Mike went to, before it started in 2011, obviously Mike went to England and got the deal with GCube, and round one launched with 1,400 megawatts of capacity. We did a large amount of projects in all 5 rounds so far. So we have extensive knowledge with renewable energy projects in South Africa and a few in Africa. Round 2 kicked off in 2012 with an additional 1,000 megawatts, and then a bit of a gap until 2014 when round 3 reached financial close. Then additional 1,500 megawatts. Round 4, big gap there, 4 years. I'm not going to talk about all the gaps. I think these are all been it's all widely known, the reasons, and it's all in the news every day. 2021, round 5 was a big round, 25 preferred bidders, 13 solar and 12 wind, an additional 2,600 megawatts, 14,000 new jobs and 50 billion rand in investment. And then round 6 has just recently been announced at the end of 2022 who the preferred bidders are, and we will just wait to see how that gets on. There were only 6 preferred bidders and they were all solar. Thanks, James. So the round 6 updates. 57 bids were received for this round. Only 6 were successful. Only solar PV was chosen. Out of all of the 57 bids, no wind. In the past, from rounds 1 to 5, only the solar projects were only around 75 megawatts, the largest ones. We are now seeing them in the region of 120 to 240 megawatts. These are massive projects that require extensive capital. This is where our partnership with GCube and our other capital providers will help with everyone getting their projects over the line. As I said before, we've got $500 million of US capacity in one project, and these big projects are the large capital investments. I mean, The 100 megawatt solar projects are about 2 billion rand, about 105 million US dollars. That's 100 megawatts. 140 megawatt projects, about 4 billion rand, 210 million US dollars. And then we'll get into when we get into the 200 megawatt space, it's going to be probably 5-6 billion rand territory. So we're here to assist getting these projects bankable and over the line, and in quickly time as possible. Programs we see in Africa similar to REAP are the Zambian scaling solar program, refit, I've said, for Namibia. Botswana and Mozambique also currently have programs in place. Obviously with our partners iTOO and Hollard in Africa, we will hopefully see a lot more projects coming online where we will be able to assist. Round 6 there, everyone should have seen in the news, there seems there have been some issues, obviously, with only 6 projects being successful. This is partly due to some issues at Eskom and obviously grid constraints. The failure to appoint any wind projects in round 6 was basically because there was no grid capacity in the eastern, northern and western capes where all the projects were located. This stems from C&I projects taking up most capacity in those areas. There seems to be a move away from REAP because of the issues surrounding it, and the IPPs are now concentrating more on the private sector and C&I projects, commercial and industrial solar. We, as RRA, iTOO and GCube, we hope to see the REAP programs kind of moving into Africa, and also the C&I business taking off there, where we can support, like I've said before, these are the mines, private off-takers, municipalities, etc. Next slide, thanks, James. In the short term, only private procurement can solve the challenge of the energy availability on the African continent. But these projects need large capital investments. It's a lot of money to get these contracts off the ground and to get built. So we only see the direct foreign investments happening in the African continent and in South Africa through the lenders and through funds in Europe. I mean, there are plenty of funds available to fund these projects, but honestly not enough projects for this to kick off and to really forge ahead with African renewables as we see it now. But hopefully this will change quite rapidly. The evolution of the electricity sector from a centralized planning and monopoly approach to an open electricity market will inevitably, happen with and will follow similar trends worldwide, where energy trading is facilitated across the grid through wheeling. We see the wheeling in the news and happening currently in the private sector here, with the private IPPs wheeling the energy to multiple off-takers across the country. There's a small little snippy tool at the bottom there with South Africa's current electricity mix. As you can see, mostly is baseload coal at 80%, and renewables is only at a small 13% offering. Thanks, James. Market conditions. James, I'm going to hand over to you now. We can field any questions hopefully at the end.
Yeah, thanks, Jared. So good morning to everyone. I'm going to take take you through a little bit of the market conditions here now, and then on to kind of the key considerations we make as insurers, and what things we're kind of thinking about when we're looking at a particular risk in Africa. Given the nature of renewables, within the African continent and the kind of concentration in South Africa. Most of the experience that you'll kind of see me talking about is based on South Africa, but that's purely due to a volume of projects rather than a kind of appetite or anything like that. We're open for business across Africa and we want to see projects across Africa. This is just a case of historically that there's been more projects in South Africa, so that's where the kind of experience grows from, I suppose. The capacity behind RRA, as Jared has kind of mentioned already, comes from the London market. So Jared works in conjunction with myself and some other London players to come up with terms and conditions for the projects and make sure that we're sensibly pricing and quoting these renewables projects within the African continent. The renewables market the insurance market in general has gone through a kind of transition period in the last few years. It's something that happens regularly in the insurance market. We find it goes from soft to hard, and since 2019 we've seen a hardening market. I'm sure you've all seen within your own lines of business areas, etc., that the market has hardened. In 2019 there was a particular hardening of the renewable space, and that was just due to the historical performance of the books of renewables insurers. We saw lots of players leave the market due to heavy losses, and so something needed to be corrected and fixed. And so since 2019 we've seen a hardening of that market. As it says there, that came after many years of the soft market. I was able to take a lot of benefits from that when I was on the broking side, and certainly it did get very soft, so some sort of correction was needed. We've seen, in terms of renewables projects themselves and actually the global climate, we've seen an increased number of natural catastrophes in recent years, extreme weather events. I'll come onto this in a bit more detail later on, but certainly South Africa, well, Africa generally as a continent is quite fortunate that it doesn't suffer from too many large-scale natural catastrophes, such as hurricanes and things like that. But as you can imagine, unfortunately, losses in other areas of the world do impact on the capacity available within the renewable space. So if we see heavy losses in the likes of the US or Australia or Asian countries, wherever it might be, then that does restrict the amount of capacity that we may have for elsewhere. Okay, so as insurers and reinsurers, we're assessing each risk individually alongside Jared to make sure that everything gets a sensible quote for what it is. As I said, with the CAT element, there is obviously a small part of it is a macro scale where we have to consider across the book how we're managing the risks and things like that. But we do also take consideration of each project individually and the specific risks associated with that one. Sorry, excuse me. We expect the current cycle to persist, so rates and deductibles we're generally seeing sort of leveling out at the moment. There are some specific risks we're going to come on to in a second where we have to consider slightly higher deductibles. But in terms of the kind of standard position for the market, we're seeing this kind of level out at the moment. We're seeing, as projects age, we're seeing a lot more of their warranties and maintenance agreements expire. That's certainly a key consideration for us as we go forwards. Similarly, as projects get older, we see more mechanical breakdowns and elements like that. And then the global supply chain issues I'm going to come on to shortly. So that's just to keep in mind for now whilst we move through this. Okay, so the key considerations as insurers, we kind of split this into two parts in this presentation. The first element is around this particular image, and the second piece is around it's slightly more general. So the first point here is probably the largest single concern facing the renewables market at the moment. GCube actually recently issued a report looking into this and how it kind of impacts on how insurers have to behave and manage the risk associated with these projects. So the risk we're looking at here is the growth of wind turbines. So this is much more specific to wind and wind turbines than to solar, but it's certainly the kind of biggest single risk that we're probably facing right now. So you can see here, this image actually focuses on offshore wind turbines in terms of the scale of what's being implemented, but the onshore turbines have grown in a similar fashion. So we can see back in sort of 2000, a wind turbine we might expect to be 2 megawatts, and we would have seen that as a really big turbine. That was kind of huge at the time. And over a course of just 25 years, we're now looking at, well, we've written this graph says 2025, 15 megawatts, but actually quite recently in the last few months, a 21 megawatt turbine has been announced. So we've gone from 2 megawatts to 21 megawatts over the course of around 23 years, which is a monumental growth in the size of the turbine. And that brings with it all kinds of other challenges and considerations that we have to make. You can see that so onshore turbines generally we've ranged from 2 megawatts to 6.5 megawatts. Interestingly, because of the way that South African renewables in particular has grown through the different kind of stages of the rounds, we see a lot of those projects in the early stages with the 2 megawatts, maybe a 2.5 megawatt turbine, and we're now seeing a very big jump. Because of the kind of delay between the rounds, we're seeing a big jump from those sort of 2 and 2.5 megawatt turbines now right up to the 6.5 megawatt, which is obviously quite a big disparity between the two types of projects. The round system has been really good for some elements, such as building up expertise slowly and things like that, and making sure that people understand how to install these projects. But on the kind of flip side, with this growth in technology, because of the gaps between the installation of these projects, we see kind of big jumps in the technology that's being installed, and the turbine size that's being installed. When you compare that maybe to somewhere like the US or Europe, where it might be that we had 1 megawatt, 1.5 megawatt, 2, 2.5, 2.75, 3, 3.5, 4, so it grew much more incrementally. We're actually seeing quite big jumps in South Africa in particular. So this just gives you a kind of different idea of the scale of these turbines. So 15, when we talk about like a 15 megawatt, 6.5 megawatt turbine, sometimes it's quite hard to visualize. So this is the rotor size of the turbines. This gives you an idea of kind of how they've grown. If you look back to 1979, they were about 10 meters, sorry. And then we're now looking at things at around 172 meters. To put that into context, an average football field is roughly 100 meters in length. So we're talking about 1 3/4 football fields in terms of the kind of rotor size. As those turbines spin, so a particularly large piece of kit. Okay, so considering this in slightly more detail and how this impacts the way that we have to consider these risks. So the increase in size is one thing that obviously potentially creates a larger exposure. But the larger exposure it can be broken down into lots of different elements. So we have the increase in size gives us an increase in exposure due to things like the size of the blades and the specialized trucks, transportation trucks. So when we were looking at, say, 2 megawatt turbines, the blades were much smaller, the nacelle was much smaller, the tower was much smaller. Every single part about a wind turbine was much smaller. And so, as you can imagine, a much smaller truck could deliver all these parts. We didn't need to have huge trucks, huge cranes, everything else really specialized to carry such large pieces of equipment. Now that's not necessarily an issue, though those pieces of those trucks and cranes, etc., do exist. the problem is there's far fewer of them. So as soon as something goes wrong, it's much harder to get hold of one to come and do the works. It's much more expensive just generally to employ one of these pieces of equipment because they're so scarce and there's far fewer of them. We have those size of blades and specialist transport trucks around 75 million. So there's kind of like around 75 meters rather. So there's a big change in terms of the size and scale of these trucks that we need to obtain to transport these new blades. That coupled with a lack of kind of experience in these particular size of turbines causes us some concern. So, like we spoke, as I just spoke about with the rounds and how that's impacted how quickly the scale of the turbines has grown. That obviously means that contractors now are looking at installing much larger turbines, but probably don't have the experience of. Probably don't really have the experience of ever installing something that large. They may have lots of experience of installing the 2 megawatt turbines, but do they have experience of installing the 6 megawatt turbines? Unfortunately, because of this scale, size, and slightly different technology involved with these turbines, it's not quite as simple as I once installed a 2 megawatt, I can now install a 6 megawatt turbine. There are lots of other considerations that we need to make. And what we've ended up seeing, unfortunately, in other parts of the world, is that this lack of experience of contractors has led to losses where contractor error creeps in. So it's something just that we need to make sure we consider properly in South Africa and make sure that people with correct skill sets are working on these sites. What we also see, sorry, apologies. What we also see for a lot of these turbines is that they're uncertified. So as a turbine manufacturer, you normally create a new wind turbine, you get a certification for it, and that tells us that the wind turbine works, essentially. What we're seeing is as these turbines grow, we're not actually seeing the certificates achieved before these turbines are being installed. And that gives us a bit more uncertainty around, does the new technology work? Will it fail much quicker? Will we see further issues on that? And so just at the bottom there's an element of the sort of deductibles we're seeing for these large turbines. So 16 million rand and 60 days. That's very different to a 2 megawatt turbine, but this is the kind of consideration that we have to make when we're looking at the exponential growth of these wind turbines. Okay, so taking a step back and looking a bit more generally at renewables, there's a few more considerations to kind of make and how we think about these. So in terms of the size and scale of general claims now, we're looking at somewhere around 70 million rand. That's quite a big change, and that covers both the solar and the wind side of things. So historically, the projects have been much smaller. As Jared mentioned, we're now looking at 100 to 200 megawatt solar farms. Previously, we were looking at maybe up to a maximum of sort of 50 megawatts. So in terms of the solar farm, there's much more exposure. There's a much greater surface area being covered, far more panels, transformers, etc., to get damaged. Similarly, we're talking about wind turbines growing. And so generally, that's giving us a much larger claim on average for each project when something goes wrong. We're seeing lots of issues with the supply chain. And so the next few points actually reference the supply chain. So we see lots and lots of bottlenecks. And that often comes from a dependence on China, but also a dependence on just a handful of manufacturers. So if you think about wind turbines, we can think about Vestas, Siemens, Vestas, Siemens, Gamesa, etc. But there's still only probably around a handful of wind turbine producers that we see on a regular basis. The same is true of solar panel providers as well. So we're putting a lot of eggs in one basket, that there isn't a huge amount of manufacturers out there who can help support the process. And the pandemic really helped really highlighted that, where we saw various manufacturing warehouses have to shut down and factories have to shut down due to the exposure to the virus. So this shortage is causing a rise in the costs of many of those key components. We're also seeing a rise in the cost of materials, which has been exacerbated by the kind of Ukraine-Russia war, due to several components going into solar panels actually coming from mines in the Ukraine, and so we see lots more challenges around the cost of some of those parts now. There's unprecedented demand for technology, equipment, skilled labour, and that leads to equipment and staff being spread very thinly. Now, the fact that what we're talking about, staff being spread thinly, isn't that we see projects not employing people. They employ lots of people. What we're seeing is that the expertise needed for some of these projects are spread thinly. So it might be that far fewer people on that site have the relevant experience from previous projects to work on a renewables project. Okay. And then in terms of two other slightly different points, what we've seen historically is that lenders are involved with these projects, and the lenders have a common terms agreement, which includes insurance requirements and things like that. Some of these requirements were set quite historically. As Jared said, the first projects kind of went in 2011, 2012, and terms and conditions set then are no longer relevant in today's insurance market, unfortunately. So there's a lot of conversation with lenders to go about how we move from what the market used to look like to making sure those common terms agreements are now fit for purpose in today's market. And then one other key consideration for some of us insurers is the ESG guideline. Now, ESG, you might think, well, it's renewables, it covers the ESG requirement, what's your problem? And from a GCube standpoint, if it's renewables, that's okay for us. But we do see several players in this market having to consider what the renewables is actually powering. Is it powering something to mine for coal? Is it powering something to mine for some of these elements? And where does the ESG fit within that? Not only is it renewables, but also is it contributing what is deemed to be positively in the ESG framework? Okay, so I mentioned that I would talk about extreme weather events. Now, as I kind of said, Africa is quite lucky that in terms of natural catastrophe events, it's fairly benign. However, we do see some elements creeping into African countries as well. So we don't really see the hurricanes, the tornadoes, those kind of things, but certainly flooding can be an issue. So there's two bits there around flooding. We've seen some flooding in Namibia affect some of our projects, but certainly flooding can become an issue, and that's quite localized natural catastrophe. That's not kind of on the scale of a hurricane, but you may find if you're close to a river or lakes or whatever it might be that puts you into a flood zone, that's something we need to consider quite carefully. Wildfires can be a cause for concern. Fortunately, most of the projects have very credible wildfire mitigation plans in place, but that's something that we would always look for when trying to manage this risk. And then finally, hail. Hail is something that people often don't really consider to be a natural catastrophe or don't really think of, and that's absolutely fair enough. It's not something that the renewables market thought of either until fairly recently, but we are now seeing a lot of impact on solar projects through hail. It used to be quite restricted to just US projects, but we're now seeing projects all over the world impacted by hail, where the hail lands on top of the solar panels and essentially cracks them and means that they need to be repaired. That is something which, according to the models, could impact South Africa in the future, particularly as we see the climate change. And we also see these projects move into new areas and grow in size and scale. And so that is an area which we are keeping an eye on for South Africa as well. But in order to kind of manage these points, if your project might be impacted by flooding or hail or whatever it might be, that's not to say we can't cover it. We just have to make sure that we consider our underwriting strategy for that. So as the last point notes there, we might need to look at sublimits, increased deductibles, etc., just to manage those risks and make sure that we're all bearing the brunt of those potential higher exposures. Okay, so looking at this from a slightly different perspective, if we're considering African projects, what do we as reinsurers or insurers look for? What are we considering? What information do we need? And this is the kind of core elements that we'd be looking for. Depending on the specifics of the project, there will be other parts which we need to consider, bring in everything else, but certainly this is the kind of core information that would set us on our way. So the first 4 points are focused around that marine aspect. If you're looking at marine construction and operations, those first 4 bits are certainly needed for the marine element, to understand where the equipment's coming from, how it's being transported, etc. And we just want to make sure that looks credible from our experience, essentially. Are you saying that you can deliver something from China in 3 days, which probably is unreasonable, or are you saying actually it might take us 3 weeks, in which case, okay, fair enough, there's a bit of time built into that. That's the kind of concern around there. And also, given the remoteness of these projects, is there suitable road infrastructure to actually get the equipment to the site, or will it be built, which is also obviously okay. What natural catastrophe exposures exist, as we just discussed, and then some of these other elements are quite specific as well for countries which are newer into renewables. So as we see renewables grow across Africa, we see new territories start to develop larger scale projects, or maybe first in country projects. And so we might see concerns around the lead times. How quickly can spares get there? Because there probably isn't a domestic spares market. How does the grid setup work? So we've got comfortable with how Eskom operates, how it behaves when it comes to potential exposures due to downtime of the grid, but how does that operate in some of these other countries as well? The experience of the various contractors in countries where there's been a lot of projects, the contractors will generally have more experience. How is that being dealt with in countries where maybe they don't have so much experience of renewables projects? Are they kind of buying in the talent? Are they finding people who have worked on projects elsewhere and bringing them in to this country, or are they trying to do it locally? How is that kind of skills shortage being dealt with? And who's providing the equipment? Sometimes some OEMs are fussy about who they might give their equipment to. So what sort of manufacturers are we considering when we're looking at new projects? And then finally, there's a consideration around the community buy-in. So we saw in Kenya, we saw the Lake Turkana project has worked very hard to make sure that the local tribes in the area have a buy-in to the project. And that's just about ensuring that the community understand why the project's being built, what the benefit is to the local community, and ensuring that the local community actually gets a benefit from it, whether that's through employment, energy, all these different aspects that can benefit the community. We want to make sure that the local people have an interest in the project and understand why the project is there, to make sure that we don't encounter any issues with anybody locally. Okay, so moving on to claims. We just thought it would be useful to put some examples in to give you an idea of the sort of things that sometimes go wrong, that we often see go wrong. These projects are specific to sort of South Africa, but that's not to say that that's the only place that they ever happen. Actually, these are seen across the world, but we've taken examples from South Africa to make it a bit more sort of local, I suppose. So in this example, there's been a fire up the tower, and the entire turbine needed to be replaced. So we saw, as you see there, a property damage of 50 million rand and a business interruption of 16 million rand whilst that turbine was replaced. This could have been down due to potential technical faults. It could be because it was a brand new machine in terms of not having a certificate and perhaps part of the equipment was faulty. It could be for a number of reasons. As we mentioned, there's flooding in Namibia. Solar farms don't particularly like water, believe it or not. Loss there. That's just another image from that flooding. As the waters recede, then you start to see where the damage might have come in, whether that's causing of fires in inverters and elements like that, or specific damage to the panels as they get scratched or damaged due to the waters. Okay, so this is damage to a blade. So you can see in the sort of center of that picture, there's a rope which appears to be too tight. This is just about during the transportation, the equipment wasn't loaded and unloaded correctly, and so by the time we got to the site, it was clearly damaged. A wind turbine with a hole in it, unfortunately, is not particularly efficient, and is something that needs to be replaced. But interestingly about this claim, the sea freight and the cranes caused a reasonable amount of the claim as well, because of this, as we talked about, the size of turbines and how many cranes are available to do that equipment. That does cause issues in terms of how large a claim becomes as well. Okay, so marine cargo damage here, as you can see, it obviously wasn't packed correctly into the shipping container. So during its shipment, the equipment in here has become damaged, and it's not particularly clear there because of the colours, but this was a 13-month repair time in order to go back to the factory, recreate specialist equipment and send it over again. 13-month repair time, so you can imagine the amount of revenue cover that that was required for that particular piece as well. Okay, wind turbine coupling damage. As you can see from the picture there, we saw damage to the turbine. The property was covered under warranties, but we still have to pick up the revenue cover for the client, so around 4 million rand for that one. And then gearbox damage for this one. So potential 7 million claim, human error that could have been avoided. So yes, it was damage to the gearbox, but the damage occurred due to faulty installation and also a lack of the correct inspections. So something that could have been easily avoided, but ultimately ended up in a 7 million rand claim. And this is why we need to be very careful about which contractors are working on these sites and how much experience they have. Do they know what they're looking for if something goes wrong? Sorry, a further image of that gearbox. Yes, Jared, I'll pass that to you.
Great, thanks, James. I appreciate that. Hopefully that sets the scene for everyone, and if anyone has any questions, they can get hold of us. That particular photo is Kaya Solar 1 up in Uppington. It's a CSP, concentrated solar project. That's about 10 billion rands worth of assets and revenue there. It's lucky enough to spend a few days at the site following a surge in wind, dust devil. I think it was about a 60-second burst of wind. It was 20 million rand claim. So the heliostats there, the solar panels, about 40 meters in height. Next slide, thanks, James. So why work with iTOO, Renew Risk, and our reinsurance partners, GCube, Axis, and the likes? Is we've been doing this since day one, since 2011. We only do renewable energy. We know what we're doing. We only partner with A-rated capacity and the experts in the markets. I mean, we meet all the banks and the lenders' requirements. We have rapid production of insurance documentation within 24 hours. A lot of these projects require lots and lots of input from attorneys, legal advisors, lenders advisors, brokers, reinsurance brokers, reinsurers, insurers. So we all need to work in conjunction together, start the process early, so we don't have these late changes, because it gets quite stressful getting these projects to financial close. Insurance tends to be the last thing on everyone's list. And then we are the final piece of the puzzle to get the projects bankable and over the line. A lot of, if this documentation is not ready, they miss the hedging dates, that can obviously cause a lot of issues down the line. So with us, we can assist with the 100% solution, the A-rated capacity, the quick turnaround time, and etc. I mean, whatever needs to be done to get these projects over the line and get power onto the grid is pretty much everyone's end game and goal. We underwrite on behalf of Hollard, on Hollard paper. We have the large capacity. We have a sustainable approach. We've been doing this since 2011. As James said, a lot of players have come and go. They've tried to get into the renewables games. They've figured out that the claims are quite large, and then they've pulled out. We've ridden all the waves, soft market, hard market, massive claims, and we're still around. We have a great claims process and payment ability. And yeah, we're just here to help whoever needs it. I mean, James and Mike jumped onto a call the other day with the IPP to talk about potential issues going forward that they can avoid to get their projects across the line. We, in conjunction with our reinsurers and GCube, have extensive data available and a plethora of things that brokers and clients can call upon us to pick our brain. We're here to assist. So yeah.
Cool. Thanks, chaps. Sorry to interrupt. I think if we could take 2 minutes, I've tried to answer. There were a couple of themes, so I won't repeat them. Just we kind of out of time. That was amazing. Thank you so much, James and Jared. So the first few questions were really around kind of rights and strike and PVT, which I think I've answered. But happy if that's not clear, please drop us, and I will answer all of these questions. Then there were quite a few, Jared, when you mentioned the fact that 6 out of 57 were only awarded and all were solar. So a lot of people are saying, why not wind, and why only 6 out of 57? And I think based on what you said, that's really because the wind projects now are focused on the private sector, and that's really private business.
Yeah, also the grid constraints in those areas, the CNI projects, the private projects, they already taken the remainder of the capacity in those regions, and because they didn't have the red tape, the private projects that REIT has, they managed to book that capacity before the wind projects, unfortunately. So, but I think Eskom they've found a way to address that going forward. But to get new capacity in those areas could take up to 10 years to get it up to speed.
Right, thanks. Then there was a comment kind of around and I suppose this is more for James, any fear of boycotts by reinsurers due to South Africa's friendship with Russia?
That's an interesting question. From our perspective, right now, it's not something that we're looking at. We're not intending to look at boycotts or anything like that. The only restrictions that we have in terms of the underwriting we do is around sanctions, where a country may be sanctioned by the UK. we obviously can't work with them, or where there's particular restrictions on the way that we're allowed to do business. But unless there's kind of a mandate coming from a government institution or somebody like that to say you can't do this business anymore, look, we're here to support South African renewables. The government may have chosen to take a particular line on various conflicts and whatever else, but that isn't what we're looking to do. We're looking to support the growth of renewables in South Africa and make sure that we can help the country develop these projects, which are important pieces of infrastructure for everybody.
Cool. Thanks, James. Last question, and there are more, but and we'll send them to you guys, and we'll get back to everybody. But there were a couple of questions around the warranties and maintenance. So you mentioned that as the warranties and maintenance agreements expire, as the projects get older, what is the average period that this cover will be in place before it expires? And then James, maybe just linked to that, James Shepherd says, with many initial wind farms aging and technology developing, how is your performance warranty appetite developing?
So in terms of the appetite that we have, it remains pretty consistent. We're not looking to move away from older projects. That certainly wouldn't be supporting our clients in the longer term, and that's what we want to do, is support them through the life cycle of the project. All we need to do is kind of consider that risk a bit. So where clients have bought extended warranties or have wider O&M agreements, we can be more flexible on the terms we can offer. Clients may also look to insure their turbines in a slightly different way, so perhaps not for replacement value, but for the revenue that they might generate for the rest of the project. So we can look at creative ways to ensure that we don't penalise the client too heavily either, but we certainly wouldn't look to walk away from older projects. In terms of how long warranties and O&M agreements last, it kind of depends on the piece of equipment we're looking at. So turbines are usually around 5 years, 3 to 5 years. Electrical equipment is normally around 2 years. So transformers, inverters, things like that, around 2 years. Solar panels, maybe 15 to 20 years. So it kind of depends a little bit on the specifics of the technology we're talking about. And then your O&M agreements are usually done in kind of 5-year periods. So you'd sign up for the first 5 years, and then you would renew it for another 5 years with whoever, whether it's the same contractor or you move to a different one. They're often in sort of 5-year chunks.
Cool. I see we still have over 550 people on, so I'm going to ask 2 more quick questions. I know it's a bit cheeky. So James just asks, has theft been an issue at all, or is it just a small inconvenience below the deductible?
Yeah, so theft often is a concern. Although the issue with theft is that although the amount of equipment that is often stolen is below the deductible for the property, it's all the other damage that it causes. So when somebody's after some copper cabling, they don't just cut out the small bit of copper cabling they're going to fit in the back of their van. They normally drag the cables as much as they can, which causes damage to other parts of the project, which then have to be fixed. It's not something that gets taken. It's just that element of the project gets damaged. And then similarly, if you steal the cables, there's a limit as to how much the project can export. So again, the business interruption claim can become quite large. So it is a consideration we have to make. We always want to understand what security is in place and make sure that it's covered and protected in a sensible way. Because yes, the actual bit of equipment that gets taken is usually below deductible, but all the other bit of damage is the concerning part of the claim.
Good point. Yeah, thanks. Last one, I promise. So Bongani just says, would your product offering cover operational phase as well as failure to supply, or guaranteed output consequential losses type of scenarios?
So in terms of failure to supply and guaranteed outputs, we wouldn't necessarily cover the guaranteed output, but let's start from the beginning. All of the cover we provide is based on physical damage. Okay, so we will cover the revenue for the project. We'll cover damage anything, but it all has to so if it's then that could potentially be covered. If it's there's some damage on your project, so you can no longer export, we would cover the loss of revenue, which would often be used to purchase. It all has to be linked back to a physical damage
We don't do
on the
guarantees
project.
either.
If there's exactly, we don't do guarantees either. Yeah, so if there's a specific concern around a particular project, we can always look at how we kind of consider that. But in terms of the kind of standard offering, it doesn't really give the guarantee part. But there are ways that it can kind of be covered.
Brilliant. Awesome. Thanks, James. Thanks, Jared. I think that thanks for letting us go 10 minutes over. We've missed one or two, but I think as Tobe said in the chat group, we will revert back on all the questions and send the material through. I think there's also a couple of interesting links that James has shared with us that are very cool bedtime reading pieces as well. So yeah, thanks chaps. Thanks for everyone for joining. Please reach out to Jared and the team, or through the iTOO team if you need. I think the details are all on here, and yeah, look forward to hearing from you. Thanks, guys.
Yeah, thanks, Dale. Thanks, James. Thanks, everyone, for joining.
Yep, thank you, everyone, for joining. Good to see you.
Everyone.
Thanks, guys. Thanks for very interesting stuff.
Thanks.
Thank you very
Thanks,
much.
guys.
Cheers, guys.
Thanks, Tian. Thanks, guys.
Ciao, ciao.